Typical investors for impact invest in early stage social enterprises that have the potential to develop new and innovative way to solve pressing social challenges.
My name is Sébastien Martin. I'm the founder of Impact Collective. It's a non-profit organization to help impact startups at a very early stage. We are non-profit and we're helping them with a larger network of companies and foundations. And then I'm also representing Impact Collective supporters. It's an investment club where we are 10 business angels and we invest in pre-seed impact startups and consider ourselves as impact first investors. Well, this is a very tough question because we're dealing with startups that are in a very, very early stage. So normally they have an idea, they have tested the idea, very often in a small scale. So they have maybe a prototype, they have performed some pilot projects with maybe 10, 20, sometimes 100 participants, and they have a grasp that their solution might work. Sometimes they have evaluated a before and after scenario. So this is probably something we consider a little bit more advanced. But in the end, we don't have clear impact KPIs to say, okay, you have to fulfill and check in the box. But we will look at the problem that they are dealing with. And if this problem is well defined, what I mean by this is a startup founder that is dealing with a problem has a challenge to assess whether this problem is a real problem, a very serious problem, and a large problem. Sometimes you're dealing with problems where the people affected by this problem, they have found workarounds. So themselves, they would not consider this as a big problem anymore. Maybe a little hassle in the daily life, but not a real problem. And founders that are, loving their idea so much, they try to create some sort of a big problem bubble. So we need to assess whether the problem is a real one, that people also see, the people affected also see that this is a real problem. And we have a key question: what gets worth every day? This is something we tend to ask every time, and so we're discussing in the beginning is more a discussion whether the problem is a big one or not. Sometimes it's very obvious, of course, but very often it's not, because they're always acting in a niche. And we're not experts in all the niches. Nobody can be experts in all the niches, but we need to see whether this is plausible or not. So when we talk about pre-seed, that means that most startups are in a phase where bundle of assumptions, not tested product, maybe no revenues or no foundations when it comes to a non-profit organization. I tend to see a lot of startup founders that say, okay, I need 50,000 euros in order to start. And it's probably not the best approach. So bootstrapping in the beginning is probably quite good and very, very valuable as well for the startup. You don't have complacency issues or risks, and you have to focus, because if you don't have any means, then you start to get creative. And in fact, I had a mentor who told me once, when I proposed a budget for an innovation in my previous job, and he said, I will cut the last zero in your budget proposal, and then you start getting creative. So I think there's a lot of truth in this. And so in the early stage, I would always suggest to get with bootstrapping as far as you can. And then, of course, when it comes that you have a proven model, let's say you have beneficiaries, you have first customers, you can show the dynamic of your solution, how the impact is created. You can also prove maybe some of the impact assumptions. Then it starts to get or to be more investable, I would say. Also, professional investors will start to take a serious look at it. And I mean, we have a lot of products, financial products, to support impact startups. What I see in this early stage is they need somebody to guide them to find the right finance mix, because can be can be private equity money, so selling part of your company, can be loans from the state, can be loans from individuals, can be grants, can be subsidies, can be crowdfunding, but every financing you do comes with a cost. And it's about to evaluate, what is my long-term goal in this company, and what is the profitability maybe in this company. If you don't have any profitability, but you can generate cash flow, then maybe a loan is much better, because you can serve the loan easier. So don't waste time on searching private investors to sell them shares of your company, because they won't take it. So it's just a waste of time. Or if you're more in B2C and you can sell a good product and sustainable consumption, maybe crowdfunding is a good place to go, because there you get the money up front, you can produce and you can sell. So this is more like a sales channel. So there are different ways of seeing finance, and I always suggest to see finance as a strategy. And not so much as a bookkeeping or accounting issue, which is very dry, because it's a lot of flavors in finance, and and it's about to pick the right flavors to your dish. The big issue we have with social innovations is that the margins are very often very low. And probably you could say, in a very general way, that the state should have a big interest in those social innovations, because the primary goal of a state is to provide stability to the society, not to be innovative themselves. But social innovators are finding those holes in the system on the street which need to be optimized. And of course, these holes sometimes they come at some cost to solve, and it's maybe not in the general interest or in the public value interest to maximize profits in these holes. So I think we lack a little bit of a debate how the state can provide funds or foundations because they have a public value interest themselves, or to incentivize private investments in such social innovations. The instruments are there. They need to be combined. They need to be rethinked. I think this is something we can talk about. First loss guarantees from the state, or we can make it maybe easier for foundations. In Germany, it's very difficult for foundations to invest in social startups and commercial social startups. They're limited on non-profit startups. So it's a lot of difficulties that the social innovators face when it comes to not only to get the right funding, but also to make the model in a financially sustainable way. And I think there we need more incentives or a different approach from the state, from foundations, but also from the healthcare system. We have a lot of founders that are providing solutions on mental illness prevention, for instance, and they have a hard time to deal with the health insurance system. They're open, but they lack the legal or the regulative environment, or environment to act as a customer.
Hello, my name is Alexandra Nitzlander. I have been working in the finance industry in Germany and in Austria for over 20 years. And for the last 3 years, I'm investing in startups. I happened to pop into this landscape more or less by chance, and I immediately caught fire. And I had the chance to do a program for females to learn how to invest in startups. And now I really feel comfortable and have gained so much expertise that I can do it on my own. The most important thing is the team. It all depends on the spirit of the team and the composition of the team. And it has really to be a very compelling founder team. often it is preferred by investors that there is more than one founder, and the more diverse the team is, the better. It's also important what kind of advisors the team has. So it's really important that they are connected to the stakeholders of the field they are operating in. Also very important is, of course, the product and the problem where the product is related to, and of course the market size. And when we are talking about an impact investment, of course, will the product achieve an impact, and how this impact will be measured. And then we also look at the competitive landscape, the IP rights, and for standard investments, it's also very, very important to look how scalable this solution is. And this, of course, is also applying to impact investments. But when talking about traditional investments, scaling and the path to exit is even more important. Female investors have the attitude that they care more about impact, is my general impression, and that when they want to give not only money, they also want to bring in additional features like their network, how else they can help. And within the Rising Tide community, there's a whole variety of skills, technical skills, marketing skills, social media skills, and we usually put together these skills, and we, as we come from so many different geographical areas and have such a diverse background, we usually can be of great help to investees.